Mic check. Mic check 1 2. Alright, what's happening everybody? So I'll try and keep this one somewhat brief, but when I say that it might be over an hour, it's hard to say. Because there is a lot of stuff going on in crypto right now. That stuff in crypto is both positive and negative. It's basically a double-edged sword. And I can't see us as individuals not acting, being able to change anything. Now, before I continue on, I'll cover just briefly what you could do, with Hex. You get about 20% APY. Now, that's at the very low prices, which it is currently sitting at. Also, everything on the Ethereum side in the Richard Heart ecosphere is down a lot, like a lot. And the free stuff is also down. The derivatives, the other free airdrops, down. Icosa, down. Hedron, down. Maybe I didn't get the memo, but a lot of that stuff, bargain bottom prices. Now, will it recover? Time will tell. Once a bull market kicks off, maybe, just maybe, there'll be more free energy in terms of money flowing around. People might buy some things up. But I'm pretty sure that anyone who finds this stream is aware that the secret of crypto is to be a whale and have a fuck ton of it. Because if you don't have a fuck ton of it, then you ain't gonna move shit in terms of prices. Now this is the same problem we all experience in everyday legacy finance. This is the ongoing battle. The reasons why wars are fought is for money, economic energy. Who has the most of it? Back in the day, who had the most gold? Which empire, had the most? They used to fight wars over gold, didn't they? To the victor goes the spoils. Now, you could interpret that as a negative statement, right? But it's brutally honest. Now, in the Richard Heart ecosphere, if you were lucky enough to get it early in Hex, for example, you basically were able to create huge economic energy bags from very little. Now, that has reward effects. This is able to flow over into the real world legacy finance should you choose, because you can exit. Now, liquidity providing is relevant because if you're not careful, maybe, just maybe, the impatient lose their money to the patient. Not taking into account all the sacrifices that took place in the system and that removal of economic energy. Now, that aside, if you were looking at providing liquidity within PulseX, for example, you'd be seeing here some pretty decent returns. However, I'd like to add a caveat to that. Just think how low the prices are on Pulse right now. Think how low they are on PulseX right now, relative to, I guess, the sacrifice phase. Yes, the argument is, had you have held, you've locked in your gains, arguably, at a point in time when the sacrifices were equal to the amounts which you sacrificed years ago. Now, currently, I think PulseX is still down relative to the sacrifice price, and Pulse Chain is about parity. So large whales would have sacrificed, locked in quote-unquote profits, then received the airdrop, the world's largest airdrop in cryptocurrency. And that is pretty amazing, I've got to admit. And I would imagine when analyzing the data, going back over it mentally, if you remember, there was a lot of accounts of people switching over to stables. Now, I questioned why this was, and there was theories out there that maybe they'll turn those stables into things like purchases for Hex on Ethereum to get a copy of that, and also to increase the price of that particular finished product, which is immutable, cannot be changed, built on top of Ethereum, eHex that is. However, some of those wallets, potentially, I haven't done the on-chain data, but based on logic, if you think about it, would have most likely bridged some of those stables over into PulseX, because where else are you getting these stables from? Think about it. You've been able to enter into something like Hex very early, create huge economic energy, and then be able to use that economic energy to produce more APR in the form of another token to then compound it on itself, potentially provide liquidity for it, or simply exit the system and extract value into either other tokens or into fiat, into the legacy world. Now, this is all taking place during a time of huge uncertainty in the markets. Think about all of the collapses that we've seen, the dominoes that have slowly been going off the cliff one by one. We saw FTX, Celsius, 3 Luna. The list goes on and on. Think about it from its inception, all the way back to Mt. Gox, to this current point in time. Latest thing, SEC FUD. Now, this is the double-edged sword, because if, for instance, you are taking all of those events and bundling them all in together and labeling that crypto, it looks like a shit show, right? But now, what are we seeing? On the back of SEC, huge SEC attacks, I would say, legal attacks on US-based crypto exchanges, remembering it's not retail investors they're going after, it's the actual exchanges themselves. And what is a good example of this? Well, this here, this INX SEC regulated firm only lists 5 cryptocurrencies on its platform, considering them non-securities. Now, those happen to be Bitcoin, Ethereum, USDC, Avalanche, and Litecoin. Those 5 you can play with. Now, why is that relevant? Because not really breaking, because this isn't like a news channel. I'm not trying to be a crypto reporter here. I'm trying to point out things that are relevant to developing trends and narratives that maybe might influence the future. Now we see a crypto exchange backed by Schwab and Fidelity, goes live offering Bitcoin and Ethereum Ether trading. This is huge. Remember how there was jokes that maybe, just maybe, one day hedge funds will be buying Hex. Hedge funds will be seeking yield. Hedge funds will be looking to enter the crypto space. But what do they need before they can enter the crypto space? They need certainty. They need things like we're seeing unfold with the SEC going after certain exchanges in the US, remembering. Now, it is US exchanges that are the target of the SEC. It's not the retail investors. It's not the individuals like you or I or anyone else who holds cryptocurrency. Nothing can be done about that. But what can be done is government certainty, government regulation, and clarity on that government regulation. Now, I'm no way in any favor of any of this regulation. I think it's like trying to regulate bottle caps. It's like trying to tax bottle caps. But this is my opinion. Now, I'm not the SEC, I'm not the US government, for example, branch who controls the SEC, or however that actually works. But what I'm seeing is some sort of clarity developing out of all this, the hallway of mirrors. Now, when you see certain exchanges saying, this is not a security, this is not a security, or this is not a security, and then you see large exchanges backed by very large hedge funds come out offering to literally exchange certain cryptocurrencies, it really is mind-blowing, because it might just be, as I said before, it might just be one day you'll go onto the hex.com website, or however you do it, and you find that the price is a lot higher, because literal hedge funds have come into the space and they will be seeking yield, because maybe, just maybe, they're also realizing and have been monitoring how profitable real DeFi is, how profitable yield farming is, for example, how profitable trading like a degen with really good technology, most likely automated systems that can crush the competition, that just wipe the books up and down. How many times have we talked about scam wicks, in trading, traders get wrecked, all that shit. So no, some traders get wrecked, but if you're the casino, usually you're winning. Now, where was I? The next thing, this one came out. This is the EDX, which is funny because they switched the D and the E. So instead of being a DEX, it's EDX markets. I don't know if that's marketing or what this is about. But it is saying that this digital asset, EDX markets, begins trading and completes new funding round. Okay, so EDX markets provide a trusted, efficient, liquid cryptocurrency trading experience. Again, this is in the middle of all the scare tactics, I guess you'd call it, from everywhere, from the media covering the SEC FUD. Maybe it's people getting confused as to what is actually going on, maybe trying to scare some people away. Meanwhile, we're seeing, like, this is reportedly, we're seeing actual exchanges list and saying they're only listing these ones because they are deeming them non-securities. And then we're seeing, the whole hedge fund space, like Fidelity, offering an exchange on top of the BlackRock ETF. Now, I'll cover that in a brief moment. This exchange is quite interesting because it is giving, it's like giving a pathway for very large players to access crypto on top of the potential ETF rollout, on top of the quote-unquote clarity that we're seeing, where the narrative is being pushed that only certain ones are being deemed securities and not securities. Now, funnily enough, in this article here, it does mention Bitcoin Cash, which is a fork of Bitcoin, and it does mention Ethereum. So my argument would be Pulse Chain being a fork of Ethereum would be follow the same precedent as Bitcoin Cash, as it was a fork of Bitcoin, but that's not the point of this stream. Now, this particular exchange is pointing out that it strives to meet the needs of the world's largest and most sophisticated financial institutions. That is fucking huge. Now, in the time of SEC FUD, it's funny to me that an exchange backed by large institutional investors will be coming along and providing this service. How is it that they are, I guess, A, getting their hands on this crypto? If that's not the case, then B, how are they making profits? Maybe it's just pure fees they're going to be profiteering from, which is fine because they're going to be providing huge doorways for large players to access various forms of cryptocurrency. He then explains here a network of firms can execute and settle trades between crypto assets and fiat currencies. Now, this is also very interesting. in terms of how is this going to be handled in the shadows, in the aftermath of what we saw with banks like Silicon Valley Bank, which were providing services to cryptocurrency exchanges. It seemed as if cryptocurrency was being cut off at those particular attack vectors. Things like banks providing services to crypto exchanges, that seemed to be getting cut off. Now, later on, it now seems, now it's not talked about in this particular article, but it's saying that, this particular network will look to provide and execute settle trades between crypto and asset and fiat currency. So it is possible that exchanges like EDX will have access to similar services. This is all hypothetical, that hedge funds like Fidelity have access to. So the same sort of banking systems that they have, the large hedge funds, are now going to be offered to or work with the new EDX exchange, it appears. That is huge. And it's all being rolled out in an interesting timeline as well. Now, this year's just flown past. We have the BTC halvening coming up next year sometime. You also have the election. You also have the US Fed rates, possibly they called it a skip. So they've skipped a potential rate increase. It appears to be the signaling. But then what happens after that? Maybe they raise it one more time. Maybe they skip again. Maybe they call it a pause. Then what will happen? Wall Street will probably rejoice. And then what? Because the economy is looking wrecked. So wrecked. And this is what people are not... I haven't been looking at mainstream media for that particular stuff. But when the Fed has to finally pause, the economy is most likely going to be... What would the word be? Other than wrecked. Other than fucked. It will be in a desperate state. It'll be like you're trapped in a desert and you're dying for water, and the closest water is like a 6-month walk away. At the earliest, at the earliest. That's the sort of thing that could be coming. Now, I don't know if the particular creator of Bitcoin had the all-knowing sentient AI capability to predict all this, but I hate to say that. Well, I hate to say actually, but it's kind of very good, for lack of better words, that crypto hopefully will crush everything when legacy finance is going to be fucked. We're seeing the rising up of the BRICS gold-backed dollar. We're seeing issues with sanctions not working and making the Russian ruble function better. We're seeing sanctions being ineffective. And what that means is, where and how does the US fiat dollar hold its power if arguably it's backed by military might? Well, if that doesn't work, which is what the military-industrial complex is famous for, renowned for, then what else will work? The economy. Using money. That will work. That is what China's doing. And this is why we are seeing, it is frustrating to see, I don't want to call it the downfall of certain English-speaking nations, but we are seeing this weird point in time where the countries who were once thriving and prosperous may no longer be the same. They may be seeing diminished returns on their economy, on their productivity, and you might see the rise of not a new empire, but a new usable fiat dollar backed by gold brought about by the BRICS Plus nation. That's insane. Like, we also might see crypto itself being thrust into the spotlight again and again, but for positive reasons. Now, we'll continue on with that. Yeah, so we can see here, after that little speech, Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. As I said, Bitcoin Cash is a fork of Bitcoin. Ethereum is listed. Litecoin, arguably a fork of Bitcoin. It is getting very fucking interesting. Now, we have this here. Crypto exchange backed by Fidelity and Citadel Securities starts operations in the US. So this is the direct opposite. The direct opposite of the SEC FUD. I feel like there's a plan brewing in the background, and it's going to be good for mad gains, but I feel like it's going to be bad for freedom. I could be wrong though. I could be wrong. But this article explains EDX markets plan to step into crypto space just when the regulatory developments are quite hot and the US SEC had been cracking hard on crypto firms. So is it that some people in the finance space had some knowledge about what was going on, and now they're seeing the regulatory guidance being rolled out, and based on the steps being taken, they've aligned it with a timeline which they think might roll out, and so they've decided to roll out their exchange. You know what I'm saying? So they go, okay, SEC is going to ban everything, but they're not seeing that. They're saying, okay, SEC is going after certain exchanges because of XYZ. So they're going to release an exchange based on what the SEC has said. And what is that? You know, it's this. It's undergoing a seismic shift. Still too early to say whether it's good or bad. That's what I'm saying. It's hard to tell. Can't remember what I read before. The fog of mirrors. Some shit. As per the latest report, hang on, I'll look it up. I shall look it up. On DuckDuckGo, remember people, use DuckDuckGo. Not the fog of war. It is. Might be the hallway of mirrors. I'll have a quick look. We just have a little pause, a little interlude while I look at this. Because I want to get this terminology right. But what a time to fucking launch. In the middle of everything, you're like, fuck it. Let's just roll out by a huge hedge fund backed operation, an exchange in the US, right next to all the bloodshed that we've just seen. Come on, you can't tell me they don't know something. The wilderness of mirrors. That is what the fuck it is. I swear to God. Nah, I'm sorry for the swearing, but. So interestingly, crypto exchange. Oh, fuck off. Fucking shit. Sorry. See, look, something's happening and it's just like spamming me shit. Have you finished, computer? Yes? Okay, good. I'll continue. Now, interestingly enough, crypto exchange, the X Markets, is backed by some of the top financial giants such as Fidelity, Citadel, Charles Schwab. Okay. pretty heavy hitters. As the cryptocurrency exchange steps into the market, it is wary of all the troubles at crypto exchange FTX and Binance that unfolded over the last year. The scope of the operations for ETX markets is still not clear. However, the Wall Street Journal report notes that the crypto exchange won't directly serve individual customers or handle customers' digital assets. Okay, so that's pretty fucking interesting. It won't directly serve individual customers, so you or I can't go in, I'm assuming, and purchase. And it won't hold crypto either. Somehow it's going to act as an exchange. There's going to be some interesting stuff. Earlier this year, DX Markets partnered with Paxos Stanford for offering custodial solution. As we know, Paxos is regulated by NYDFS and shall put EDXM customers' asset into bankruptcy remote trust. Then EDX Markets goes on to explain some stuff. Now, America's changing crypto landscape. Recent developments show, despite the strong regulatory action by the US SEC, big market players are still keen to enter the crypto space. So this is the clarity everyone wanted. And as a result of the clarity, we're seeing big fucking hedge funds enter this space. That's not what crypto was designed for, but it couldn't have been timed any better. Now, this month, the US SEC filed lawsuit. We all know this. Tighten a grip over the crypto space, or try to. However, a week after, the world's largest asset manager, BlackRock, filed for a spot Bitcoin. See, maybe, just maybe they had some intel, or they were able to analyze the SEC's actions, and therefore, based on the SEC's actions, they were able to react as a result. This is what I'm saying. BlackRock filed for a spot Bitcoin ETF dubbed the iShares. Oh my god! I need to disable this link, seriously. Now, filed for a spot Bitcoin ETF dubbed the iShares Bitcoin Trust. Interestingly, BlackRock has chosen Coinbase as its custodial partner despite the SEC lawsuit. Just fascinating. BlackRock and Nasdaq have made an agreement to share information about trading and clearing, identifying customers. It shows that BlackRock is taking a careful approach to overcoming regulatory challenges and gaining approval for its application. Now, they're not known for getting disapprovals. I'll put it that way. They've had one in about 575, I believe. Anyway, it's an important step. Now, pull that article up next. In bringing together traditional finance and blockchain technology. Now, see this, I don't disagree with this. This is fine. I'm not against legacy finance embracing cryptocurrency, but as long as they adopt the new way, the on-chain Cody's law way, versus whatever fuckery they're going to want to try and impose in terms of regulating something into the dirt, which I don't think they're going to do, then I'm okay with that. But then the next step beyond that is the whole central bank digital currency. Now, this is the frustration that I'm having with this entire space, because I know for sure that BlackRock's previous history and hedge funds' previous history has not exactly been one that goes against government regulations. The complete opposite. They adhere to they make sure everything's perfect. This is why, this is my analysis, this is why BlackRock has barely had any disapprovals for their ETFs. Now, it then goes on to say, Coinbase involvement applications, close relationship between traditional finance institution regulators, cryptocurrency platforms. See, that's fine. That's fine. As long as you leave me alone and I'm able to still play with my little cryptocurrencies, right? You don't come and tell me there's a new CBDC in town and I have to spend everything before the time runs out or something. Now, this reflects a larger trend of merging the traditional finance industry with the world of cryptocurrencies. This is what I think is coming. This is I'm even starting to notice some larger channels talk about this, how they're welcoming this. They're welcoming the large hedge funds. And I hate to say it, I also would welcome the ability to open up markets to things that I love, such as HEX, such as Pulse chain, such as PulseX, you know? I can't disagree with that. But if other regulations come out and try and target individuals and say you can't play over here in the DeFi world, then I don't think everyone else in the crypto space will be for that. However, if everyone's co-opted by literal hedge funds, it might be harder to be able to get some pushback against this sort of regulation. This is why I'm in a hard position at the moment. I'm not sure how this is all going to play out for the freedom-loving individual, which I am. Now, thus, crypto in America is not dying anytime soon, which is good, you know. Okay, we'll end on a positive. Crypto in America is not dying anytime soon. Good. Now, this is the interesting. Just saw the headline. Breaking. Let's have a look at the markets. Bastards. Stocks making the biggest moves midday. Up or down? Negatives. Okay, interesting. Now back to BlackRock files for spot Bitcoin ETF with Coinbase as a crypto custodian. That's what I'm saying. This is in the face of all the SEC fun. BlackRock files for a spot Bitcoin ETF with Coinbase as a crypto custodian. I don't think Coinbase is going anywhere. I don't think BlackRock is fucking going anywhere. I don't think Bitcoin is going anywhere. And if Bitcoin is not going anywhere, then cryptocurrency as a whole is not going anywhere. I think everyone's already over all of this. Shares are intended to constitute a simple means of making investment similar to an investment in Bitcoin rather than acquiring, holding and trading Bitcoin directly on a peer-to-peer or other basis via digital. Okay, interesting. Now, the next thing, so just to go back to this other article, it says, you know, individuals won't be accessing it. Okay, that is interesting. How does one invest in it? Won't directly serve individual customers or handle customers' digital assets. So maybe that will mean you will need some qualifications or qualify for access to this particular market. That's what I'm thinking that relates to. Because if it's saying, you know, an individual customer or handle can't access it. So when I'm trying to imagine the process on how to access it, it'll be like, you know, are you an individual? And then you'll be like, yes. Maybe it'll be like, we need to know more about you, you know, before we may or may not give you access to certain trading abilities on our particular platform, which is interesting. Now, we won't go over this one. This is just literally, you know, it is literally the opposite of what you think would happen in all of this uncertainty. Now, it's interesting because, so when you think about crypto, you don't usually think about like a managed fund or something. Some people might think about centralized exchanges. Some people might think about decentralized exchanges. This one here has been out for a long time, right? And it's basically I don't know what you'd call it. Would I call it a way to invest in Bitcoin in a similar way to this BlackRock ETF? I guess you could say yes. But it's basically saying it's been out for a while too. And funnily enough, US stockbroker Klaus Schwab is talked about. Okay, money, we're more inclined to. Now, I'm sure everyone is aware of this particular fund, but this has been open for a long time, and you're able to basically invest in a particular, you know, ETF here in Australia, which gives you access to like a 5% exposure to Bitcoin if you so choose. Again, this is all, it's completely like above board. It's heavily regulated and everything. Yeah, this company, I'm pretty sure, even provides superannuation. So pretty sure I'm allowed to just talk about this, because even though it's like, well, it delves in the legacy finance space with managed funds, ETFs, superannuation. Again, I'm not providing any advice, purely talking about it and pointing out that this has been around for the longest time. Although it's not 100% Bitcoin like the BlackRock one will be if it does get approved. Yeah, so I wanted to point that out. The next thing, Coinbase, TradeFi. This is the next thing that's disturbing me, right? So Bank of International Settlements came out, and I should be able to play this. So in the midst of all of the SEC FUD, in the midst of all of this new Bitcoin ETF being applied for, in the midst of BlackRock working with Coinbase while SEC suing Coinbase, the EDX exchange, which is it works with Fidelity and people like that, this already existing ETF that's existed for like years and years and or several years here in Australia. This comes out for the Bank of International Settlements. Now, audio capture. And it's like, hang on, why are they? Why is the Bank of International Settlements talking about central bank digital currencies?
Tokenization is more than just a digital representation of money and assets. It involves digital representation on a programmable platform, which means that tokens can incorporate the rules and logic governing transfers, as well as the information about the asset itself. Now, currently, money and other claims reside in separate databases that are connected through third-party messaging systems, meaning that transactions need to be reconciled separately before being settled with finality. Tokenization makes all this one seamless operation. Tokenization is well suited to resolve incentive and information problems. Think of an example where a buyer would like to pay when the goods are delivered, while the seller would like to deliver the goods when the buyer pays.
All of this sounds harmless, right? And it's fine because they're adopting the technology. But then listen how they want to incorporate something like a central bank digital currency, to be able to potentially roll this sort of thing out. Now, I must remind you, the 1st of July is coming around very shortly. And yeah, anyway.
Tokenization can solve this problem by executing both transactions at the same time. Two real-world applications discussed in the chapter are resolving foreign exchange settlement risk and unlocking supply chain finance. A unified ledger with CBDCs can make full use of the ability of central bank money to knit together diverse elements of the financial system. In this sense, the full potential of tokenization can be harnessed by having central bank money reside on the same venue as other tokenized claims.
Did you hear that? Did you hear what I hear? He says,
the potential of tokenization can be harnessed by having central bank money reside on the same venue.
Like a centralized token. So the next thing, again, that's just one thing I'm noticing.
Tokenization can be applied to complex cases such as supply chain financing. Supply chain financing involves information and incentive problems among many interested parties. Such difficulties have precluded arrangements that have clear economic rationale. By incorporating contingencies such as real-time external information and actions of interested parties, smart contracts supported by tokenization can offer a solution.
See, I'm fine with this. The way they present this, that's fine, That's literally the solution. Like, if you have a global supply chain. You know, maybe you keep track of everything with a smart contract. You know, maybe you issue a pallet, a token, which is not to be sold or bought, just purely track and trace it. And part of the token is, you know, once it gets delivered, maybe it burns itself or something, you know, or once it gets delivered, it gets added to the ledger, and you know where it is sitting, because the wallet could be an address, a physical location, and you've moved the token because you've scanned it from its starting point to its ending point, and then you check the ledger database, and because you've got a smart contract and everything attributed with it, maybe it's all got the same barcode connected to it, and there's a number of the applied to it, so like 1 to 100 gadgets all have this barcode on it. You know, they've all got the same smart contract. It tells you where they are, what they currently are, and then maybe it tells you where they're going. You know, that's fine. But then to incorporate that into a central bank digital currency, that is, I think that's where everything's going, to be honest. It's frustrating because it's like you're against the command and controls and oversight that would be given to the quote-unquote rulers over you, but the technology does make sense. So it's like, I'm not against, well, I hate to say, I'm not against large hedge funds coming out and making exchanges and making ETFs and being able to trade these ETFs like an investment bank might want to purchase, you know, certain shares or holdings of that ETF, and that would be injected into the liquidity pool of legacy finance and then managed funds and the deep pools that they have access to. Now, so we've covered the blueprint for the future monetary system, enabling the new. They're getting more familiar with smart contracts, although it's just a general explanation of what it could be. We're seeing large hedge funds come out and basically co-opt crypto, which is, I don't know, if it pumps my bags, I'll be okay with it, as long as it doesn't try and crush my freedom of movement. And that would suck. Again, disturbance in the force BlackRock files for spot Bitcoin ETF. This is crazy. Absolutely fucking crazy. Now, if you're really get bored and you want to look at BlackRock, what an exchange traded fund is, diversified collection of assets like a managed fund that trades on an exchange like a share. It blends the benefits of both managed funds and shares and offers investors a simple and cost-effective way to help achieve diversification in their portfolios. Can you imagine a fucking Bitcoin ETF and you have a retirement account, and the retirement account is either run by someone, maybe you run it yourself, again this is not financial advice, and then maybe you just decide, I'm going to put it all in this fucking Bitcoin ETF, and you literally will have your retirement based on crypto. And then you can't tell me that there wouldn't be an interest in profiting from all cryptocurrencies within that particular fucking fund. So what is Bitcoin, Ethereum, Litecoin, Bitcoin Cash most likely going to do, if not stabilize slightly? And if they do that, what do the altcoins tend to do? And on top of that, what if the people who start to look favorably on Bitcoin, Ethereum, Litecoin, Bitcoin Cash, etc., even, where is it? USDC, Avalanche, and Litecoin. Once they realize, maybe, just maybe, we can make some money in the DeFi space. Maybe, just maybe, we go over to things like Pulse Chain. Maybe, just maybe, we end up with things like Hex. And the old joke of the hedge funds coming to buy Hex could literally be a fucking problem. And when I say problem, it's not a problem. Because Hex is scarce as fuck. And if these low prices haven't encouraged people to sell at a more rapid pace than they might have, say, if it was at 55 cents or $1 on 2 chains, for example. And then you got big numbers coming in. I'm just in shock. Now, shit. Yeah, so you can have. I can't believe I'm in crypto. I'm looking at the fucking BlackRock webpage. Are you serious? Are you kidding me? Am I back at work again or some shit? Like, okay, so an ETF. Let's have a look. An ETF, not financial advice. YouTube. Diversification of investment within the asset class. Basket of securities generally high. Pricing continuous on the exchange. Intraday pricing, so how it's moving. Liquidity comparatively higher. Transparency. This is going to be interesting. Fund holdings disclosed as often as daily. So when you see the transparency of this particular fund, you will know how much crypto is being held in a particular wallet, which will be linked to BlackRock itself, or an exchange, such as one that is backed, like an EDX market. What the fuck is going on? Pricing, liquidity, transparency, transaction costs varies according to brokerage, so you know you can make some money there, management fees, etc., etc. Accessibility high, limit orders, yes. Dude. In 12 months' time, I can't wait to see the fucking price of everything. Now here, BlackRock's record of ETFs approved by the SEC is 575 to 1. So whatever percent of success that is the percent chance that the SEC will, if you're ready, man, will approve the Bitcoin ETF. Now, if they don't approve it, I would like to see exactly why they didn't. Because if anyone was going to fucking launch an ETF, I'm pretty sure these motherfuckers would know what they're doing. Like, for real. And do I mention something like 95% of stock market trades is like automated? And I won't go there. But yeah, that is why a crypto exchange backed by Schwab and Fidelity could be coming. You know, no biggie. Just another day in crypto land where SEC is going after Coinbase, and Coinbase is partnering up with BlackRock, and BlackRock is partnering up with Coinbase, and they're going to be applying for an ETF, and they have a very high success rate. Whilst at the same time, a new exchange it goes live. It's not even like it's officially launching, because this is not even a fucking like ETF that could be coming. This is, oh yeah, and we've launched a huge exchange, but you know, retail investors probably don't have access to it. There might be some caveats as to how to access it, you know, so maybe research that shit. Cryptocurrency the for every action there's an equal and opposite reaction, and we're seeing some attempts to push the jack back into the jackbox. That's not going too well, because now, for some reason, hedge funds have decided to come out in force, backed by exchanges, backed by their services, backed by their ability to interact with legacy financial systems like banks. And that is now the cryptocurrency battle. I can't believe it. Yeah. So the goal of Bitcoin at its inception was to, provide a alternate payment system to cash, and it's progressing along because if you can purchase, if the ETF goes through, if you can purchase cryptocurrency for your retirement account, then you kind of have a hedge for inflation mathematically, and you kind of have a doorway for legacy finance to open the fucking floodgates of cash into the crypto space. Whoa. Well, that's weird. Didn't want to share that screen. Ooh, that one had magical powers. Alright, anyway. That's the stream. I'll put some links in the description. And yeah, cryptocurrency is fucking changing, man. It is fucking changing. I should say something like, DeFi can't be touched. But at this point in time, with BlackRock doing such moves, Fidelity doing such moves, once, if it is successful, once one hedge fund moves, I would imagine everyone would move. And it's not like BlackRock and Fidelity are like only in the US markets, they're across the world. And if you choose to have access to the US markets here from Australia, you probably can. So that is another thing I should point out from my understanding of how the world works. It's going to be a very interesting time. I just hope Hex fucking gets better and recovers. I just hope Pulse Chain recovers, because I would hate for... I can't see how they could Hexskins, Pulseskins, PulseXskins get left behind with this huge movement, but a rising tide lifts all ships, and I don't know what you'd call this. A pivotal moment in history where cryptocurrency becomes mainstream. I don't know if you call it a pivotal moment in history where hedge funds open the floodgates for institutional investors to purchase Bitcoin. So if you thought Bitcoin was rare already, if you thought Hex was rare already, if you thought Ethereum was rare already, it's about to get a whole lot fucking rarer. The old saying, when there's blood in the streets, you know what to do. If you've got dry powder, because the only people left with dry powder in these current economic times, I would say, generally speaking, relative to a brokey like myself, would be someone like a hedge fund. Now, there's probably other people with huge amounts of money, but someone with a huge amount of money, are they seriously going to come in and be like, I want to buy some crypto? If you're already rich and loaded, isn't crypto supposed to help the little guy get rich? I mean, it could be, I could be misunderstanding, but I'm pretty sure, Bitcoin, all those years ago, there were so many of them, and they were so cheap, and the banks are now realizing they want to catch up. And the only way to catch up is to buy them. And they're not as cheap as they once were. So for the big, large hedge funds to purchase all of this crypto, they're going to have to spend a lot more money than initially it was worth. Now, again, that reminds me of so many other cryptocurrencies out there. A lot of them, you know. If you're not early and a founder, how exactly are you going to get all these tokens? And it's a funny situation currently with the Richard Heart ecosphere because myself, I can't see people in my position having a huge amount of dry powder left, which is a shame because now is a really good time. Try and get some before literally the hedge funds do. Now, I'll wait to 555 and I'll sign out. All right, peace.